$50,000 Maven challenge up for grabs for the best question for Thomas. We're doing a live podcast here once again, guys. Share this around. We're starting in about 2 minutes. All right, welcome, guys. Cool. We got Thomas, friend of James. James introduced us here, so I imagine you guys trade together, probably through the ASFX stuff, right?
That's correct.
Yeah, as of recently, I'm not actually a part of the ASFX group anymore. However, I've known James for just about 2 years now. We met back in London in 2023, and he's been a great coach, mentor along the way through my beginning trading journey.
Yeah, cool. So let's give the audience a little briefing so that they can start preparing themselves with what kind of questions they want to ask you, because we always do a $50,000 Maven account for the best question that's catered to, something in your world, right? So you are a day trader or swing trader? Which one?
Yeah, so I'm a day trader. I've been day trading ES only for the last just about 2 years now. I started like my first 6 months, I was dabbling in some Forex, trading with the Forex firms. And then when I went to London and met James and Austin and everybody, I ended up making the transition over to the futures market, started day trading ES. And then basically for the last 2 years, I've just been getting a lot of screen time in, taking a few payouts, built my whole entire strategy around the 15-minute orb using daily VWAP and previous day VWAP, basically combining a little bit of the opening range breakout methodology with Brian Shannon's anchored VWAP, and basically just spent the last 2 years learning the patterns that form, and just kind of finalized my strategy within the last like 3 months or so, doing some back testing and going through all of my last trades, because I really do have quite a bit of data just trading ES for the last 2 years.
I love how you said finalized. Hey, James.
Yeah, it's never finalized.
Hell, you got that right. Yeah, it's like it all. That's such a great point. It always feels like I've been getting a little bit wrapped up in, this I got to tweak this, tweak that, and kind of just taking a step back and realizing, okay, that all these little tweaks do not necessarily actually help your strategy. And I went through like a week where I tried the 5-minute orb because I was like talking with ChatGPT about stuff, and then go back to the 15-minute because that's what I know best. And just for me, it comes down to having a set of rules that I can look back on and know that these rules will help me have edge as a discretionary trader. but also not being systematic where you just have to like click buy and sell when an algo tells you to.
Yeah. Well, I'm not a fan of the algo sort of trading at this point, because I think algos beat you to it. You know what I mean? All the bots are way smarter than me, so you got to be a little bit discretionary.
I like how we said about finalize. I actually used some of Hunter's stuff to get the longs off the lows there today, Hunter. Where some maybe in the past I would have been chasing the shorts.
Yeah, man. Personally, I've not been trading after October. I had such a bad month that I was like, I'm just gonna stop and just swing trade for the rest of the year.
Yeah,
I'll come back in January. I'm sure the market will probably go up, so I'm just buying the dip, and that's about it. And just let it run. You know what I mean?
Yeah.
How do you take that step back and say, I haven't been trading well, I'm going to take the rest of the year off and just focus on longer term positions? Because I got to imagine there's a lot of people who would kind of double down in that position and want to make that back.
Yeah, I'm a huge advocate of having a life outside of trading. So like a lot of traders, they want the trading because it's this like freedom, right? Or financial freedom, or maybe they want the wealth or whatever. I trade solely on the purpose that I'm having fun with it, right? I don't care about the money. I don't care about, it's just a game for me. And if I'm not winning the game, then I'm going to stop, right? And then take a step back until I can be winning the game, right?
Sure.
And the glory of it, like, too, is the other side is, hey, are you trading for freedom? Which a lot of people, they'll ask them, why are you trading? I want to be free and I don't want to work the 9 to 5. Well, if you're grinding your ass all day just to lose money, well, you're working a 9 to 5 and you're losing money, really.
Yeah.
Right? So it's much better to just chill, right? And actually enjoy your life, right? So and on the other side, like I have Maven, right? So I have things to do, right? So I don't know about you. If like, is day trading your only thing, or like I want to?
So I mean, I can actually go into it a little bit. At the beginning of this year, I did try and make day trading the only thing, and I had started to get some consistent payouts, and was like, okay. And also for reference, I really hated my job. I did not like where I lived either, so I kind of had everything going against me on like my actual personal life side of things, and was really looking for trading to be that escape. For reference, I'm 24, but I was 23 at that time. So really just hyper zoomed in, and I ended up quitting the job for a few months at the beginning of the year. Started trading awful, and really just like the most stressed period of my life that I think I've ever been in. And so then I ended up making a bunch of changes. I moved cities, moved to a place where now I got a nice setup going on where I enjoy my life outside of trading. I got a nice job that I'm working right now. Got great coworkers. Really enjoy that. And I've found a nice medium where I can trade in the morning, and I work from because I'm on the West Coast, California. So I work from 6:30 to 10. And then I got the whole rest of my day ahead of me. I'll go to work for a few, and I only work 4-hour shifts too up here, but it's super casual for me right now with the job. And then I've got trading in the morning.
Yeah.
That's I like that approach, because a lot of people, they get into trading and then they want to quit their jobs, or maybe they made a shitload of money in crypto or something, even recently, and they're like, hey, time to quit my job and just day trade, sort of thing. And then that, like, it really puts the pressure on. But what you've done is, you're working 4 hours a day, 20 hours a week, I suppose, right? It allows you to do that morning thing, do your trading, because I'm on the West Coast too, 8 a.m. right now, right, for you?
Yes, sir.
Yeah. So you definitely, there's nothing to do in the afternoon.
You gotta have some hobbies. You gotta get into something else.
Yeah. Yesterday I went out trying to catch a duck with a bow, but
oh no, I just got into fishing myself. We got
right
we got all the trout up here. They just released them all.
Oh, interesting. You know the timing of it. I don't know the exact timing of when they released them. Cool. So what can I ask you? What is your day job?
So I've been in the hospitality industry my whole life. I was cooking in Michelin star kitchens in Los Angeles during college, and then got out of the kitchen industry, started managing restaurants, and then now I'm serving with a local restaurant group. However, I am looking to get into the sales business, maybe some beverage sales, stuff like that in the near future, because we are all adults here, and at some point I'm gonna have to start paying my own health insurance and stuff like that. So having a day job that works well for me, I've really started to do everything on my terms, and I feel like day trading or trading in general is something where you really need to have that philosophy of, I'm not going to enter the market unless if I am 100% satisfied that if I take this loss, I'll take this loss, but I'm going to do it on my terms. You can't come into the market like asking for something. And so with my day job right now, I'm just serving at a restaurant and making good money. So it's been my first serving job, but I'm very much enjoying it.
Yeah. Do you think just because I want to provide hopefully some value for potential people watching here, like, do you think serving is a good like secondary outlet to trading? Or does it like, I'm just kind of thinking like maybe it allows you to have that socialization that trading doesn't or something.
Yeah.
Dude, 100%. So I've met past Forex traders. I've met bank traders, head of a derivatives desk. I've met traders that trade with with Apex and stuff like that. So I've not only met a bunch of people, it's pushed me to just be more social. But I think at the end of the day, serving is it's a great part-time job for a trader, because right now I'm making more money from that part-time job than I ever made from a full-time managerial job at a hotel.
Yeah.
So it's worked out perfectly for me, where I work the weekends in a Monday, Tuesday shift, and I'm able to make more money than I ever made working a full-time job, just doing part-time work.
Yeah, that's I've never done any serving. James, James, did you ever do like a part-time thing?
I was actually having a conversation with my wife 2 days ago, but I've worked two jobs basically. I came out of school and I played professional rugby, so I was on a professional rugby contract for 3 years. And then while my contract was kind of coming to an end, while I was still trying to pick up the trading type of side of things, I actually did coaching at a school, like coaching sports. So I enjoyed that aspect. It was quite fun. I did it with quite a few mates. You don't make obviously a lot of money, but it's quite. It was quite fun during those times. I mean, I was 22, 21 at the time, and then my trading picked up, and then that's when I went into trading. But I definitely think that you should, like Hunter, and as well as Thomas, you shouldn't have day trading as your only aspect or income. I think we've spoken about this quite a lot on these podcasts and everything like that. But it always boggles my mind. Everyone's like, I want to get into trading and just trade. I'm like, dude, it can get quite lonely. Imagine you've just taken like a fat loss on the day and then you're doing nothing the rest of the day. It can be pretty shit.
Yeah. That brings us to a question. Actually, Jack Sparrow here has got. It's like Thomas.
Jack Sparrow.
Yeah, Jack Sparrow. Yeah, I'm sure he's the real one. Hey, how do you he says convince yourself to accept a loss? I'm not sure if that's the right word, but he says, how do you convince yourself to accept a loss so that it's a part of the game? You know what I mean?
So for me, at the end of the day, it comes down to screen time, because I have watched the same asset open at the market with the same VWAP and the same levels every single day for the past 2 years. So I've gotten to the point where if I take a trade and it loses, I can look at the market unbiasedly and see the stacked confluences on the other side of the trade. And it's difficult because you feel the loss as a human, and if you let that emotion override your logical thought process, then it becomes very difficult to accept this loss or have conviction in your strategy. But I've reached this point where I've seen the patterns present enough times in real time as well, that if I take a loss, I can see the opposite side of the trade and know, okay, was I in the right trade, or was this just a loss on the day?
Sure.
I got a couple questions about your strategy in itself. The orb strategy. Have you ever tried 30-minute, first of all, orb?
So I have not tried 30-minute. I've played around with the initial balance being the hourly. However, I first got into this with the 15-minute, and me and James actually have been talking about this recently, where I did change to the 5-minute. I changed the 5-minute because I was talking with ChatGPT. It explained that in the first 15 minutes, we have now had the first algo orders in the market, and we've had the first period of consolidation. So those levels are not as strong as, or the 15-minute level would not be as strong as the 5-minute. However, the point that James made, that was the standout point, is if you're not taking the 5-minute orb break, it doesn't matter. Because I wanted to take the 15-minute break, looking at the 5-minute orb, and I mean, I think we can all acknowledge that there's 100, 1,000 ways to make money in the market. And if you use the 30-minute and that works for you, then that works for you. But if you use the 15-minute and you see that better, then you use the 15-minute, and it's all just a set of levels at the end of the day.
Yeah. I've forgotten my second question, but
well, I can throw up my screen too and go over
how
I read the market today. I didn't trade. I did
that.
not take anything today, but I can certainly go over what I was looking at,
Let's look at
planning,
that.
stuff like that.
I want to throw in, because you mentioned ChatGPT, and I actually used Grok or ChatGPT just out of curiosity one time. I said, what is the odds that the day will end will end bullish if the first 30 minutes it is bullish? You know what I mean?
Yeah.
So if the first 30-minute candle closes bullish, what are the odds that it continues? And it said within the past year, it was like 85% that, and now mind you, that might only be this past year because it's been so crazy bullish. But you can really use AI and ChatGPT for like these really quick data points that like that's a super huge edge. If you just wait for bullish closes and then just buy into it. Now, mind you, I don't know how much you're making, but you'll have to play with it.
I mean, it is a great point. I used ChatGPT a little while ago. What percentage of days on ES close bearish and bullish? Because there are people who, I only buy ES. I don't want to sell ES because markets go higher in the US. Well, 54% of days close bullish, 46% of days close bearish, and that's dating back to like 98.
Yeah.
So as a day trader, I should come into the day with zero bias on what's going to happen, because it is a toss of a coin.
Well, now I got a question for you. Did you say the Globex hours or just the regular trading hours?
That would be the regular trading hours.
Yeah. So I wonder where the difference would be, if you included the Globex. I'm not sure there would actually be.
I can get that data for you.
Get that data, James, because I just saw something. So I'll go into this just for a moment here with the 15-minute opening range, because I used the data from Edgeful for this strategy, and basically the 15-minute opening range it has a single break. So on the left side here is the 15-minute chart, and then on the right side here is the 2-minute chart. I trade on the 2-minute and use the 15-minute for some bias. These two black lines are the 15-minute opening range high and low. And basically this 15-minute range high and low is double broken, so taken out on the bottom and the top side 90% of days during the during the Globex market hours. However, if you get more specific with it, actually I can look right here. Yeah, so within the first 90 minutes of the day, only 40% of the time is it double broken. In the first 60 minutes of the day, 25%. 45 minutes, 17%, 30 minutes, 5%. So when I initially built this strategy, I had two core setups, being the single break the first breakout and then the double break trade, kind of taking advantage of both sides. But then as I dug into the data more, I realized, because I scalp at the open. I'm trading the first 2 hours of the day. I'm generally not taking anything in the afternoon. I just don't see those plays quite as well. I just haven't had the screen time. And so a lot of the times my first trade is going to be the initial breakout of the opening range or a retest of the New York VWAP after the first breakout. And I'm just going to be looking for one leg out, a one leg extension on the 2-minute chart. And then I'm either trailing my stop to 2-minute candles or just taking full profits at around 1 to 1.5 R.
Mm-hmm. So, you said you didn't take a trade today, hey?
Yeah. Okay. So I didn't take a trade today. Let's go over that because at the open, I also have Bookmap's on a different computer though, so I don't have screen open. But when we opened up, we had stacked orders below us for probably about 50 points or so from the open price, but we were rallying. So for me, that's kind of okay. I'm just gonna take a pause here and wait. I personally do not take any trades before the 15-minute opening range is set. I've found that to be the best for me, especially because I'm waking up at 5:30 at the desk at 6:30. I don't need to be trading immediately. At least let myself get into the feel a little bit.
I feel you there. Yeah.
Yeah, for sure. And
I think all of my mistakes have come down to me being too tired and not looking at the chart properly.
Yeah, I hear that. So this was the first sell signal I saw of the day, and to be honest, it ends up being a great trade. However, I have been taking these in the last month. I've taken about 4 of these trades, and I've lost 3 out of 4. And I just kind of told myself, if it's going to break opening range low, get in the shorts after the opening range low is broken instead of before, because we know that the market is naturally a little bit more bullish. So that was going to be the first sell signal I had, but it was at 640. So I didn't take it because it was still just before the opening range had even been set. Then we just start to sell off. And now as we engage with previous day VWAP here, previous day VWAP for me is anchored from the 9:30 East Coast time market open the day before. And you can see in hindsight how beautifully it was held today. And that's why as we start to approach this previous day VWAP, I wasn't looking to take the first breakout today because it is, for me, trading into this level. And this is a key level for me that is also a moving target. And a lot of times, if the shorts were to continue today, I would have expected to see something like this, where we pull back to the New York and then we chop around and then we start to get more closes underneath as the low of day VWAP's looking like this. And we're just, in general, I wanted to see more hold underneath this level for the short continuation. But at the same time, with NVIDIA being down almost 7% at the lows, making new lows of day, I personally am going to stay flat or short. I wasn't ready to take the longs that early in the morning. So I ended up not taking this first extension. I see this candle. I honestly just thought it might have been a little bit of a trap for the shorts. I waited a few minutes, saw this pullback, was looking to potentially get short here. If we had gotten a closure, if this candle had closed at this wick low, I in all likelihood would have gotten short there with a stop at this last structure level, looking for either 79 or a new low of day. And then when this candle came in here on the long side, this is, for me personally, and like my strategy, this is like the only valid stop. I don't like this stop loss here because this can get swept very easily. So this was the only stop, and this would have been my target, and that's a terrible risk to reward setup. So it's Thanksgiving week. I'm only trading today, tomorrow, and Wednesday. I'm taking Thursday, Friday off. So I just sat out that long.
Yeah. Yeah. Interesting stuff, man. I noticed, you said that you're kind of looking for it to reject off of the previous day's VWAP there and chop up a bit, and it just came back with vigor into the buys. And that's a nice outlook, I suppose, right? Is you're kind of doing this discretionary trading rather than finding something specific, and it allows you to have the freedom. Now, I imagine, if you're groggy or something in the morning or something, it's going to be very difficult to, interpret the charts properly. How do you just, question off the top of my head, how do you like maintain consistency with that sort of trading style?
Yeah.
Well, I mean, for me, morning routine is huge. First thing is just wake up and I go take a walk outside. I'm near the coast, so we got a lot of fog. Fog is still here.
Oh, yeah.
And so the morning is just a super crisp, like refresh, wake up. I got my yoga mat behind me. I'll get some stretching going. So my whole goal in the morning is to wake my body up as quick as possible, get lots of water in, electrolytes, and stimulate myself so that when I do get to the desk, I'm the most cognitively aware. Then I go through a little PowerPoint and I make my pre-market game plan. So then I get in tune with the levels that are going on. I'm looking at the overnight, previous day high, low, and it's my only focus in the morning.
Yeah.
I try to tune out everything else so that I can just stay super one with the charts.
It's good methodology.
He watches Roger Federer motivation in the morning, Hunter.
Yeah,
I definitely feel that, like, that's why I kind of stopped trading London session, Hunter, because when I wake up in the morning, I just there you go. I just can't function cleanly in the morning. That's why I only trade New York now.
Yeah.
It's just a lot better for my lifestyle. Like if I'm also on the desk, like because I'm in South Africa, for those that don't know. So London session is at 10 a.m. South African time. Like I'm out with the family, stuff like that. And then I'll still have to come back and trade New York. Sometimes it's just a bit too much. But I can actually get that data. If you just pull up my screen there, Hunter, I can show you guys quickly.
Yeah, I got you.
We can go over what you want. NQ, yeah? You want NQ?
Or yes.
Oh, yes. Okay,
we were talking yes, right?
Yeah, so this is the data with Edge4. We can look at the opening candle continuation. Now I'm going to look at the extended market hours, so this is a Globex hours included. Basically, if you, so we can see in the last 6 months, now I can change this too, but if that first hour, this is the first hour, and you can customize it to 30 minutes, whatever you want. But if that first hour is bullish in the last 6 months, we'll have a 71.43% chance of a bullish closing first hour, and vice versa for the shorts. If that first hour is red, only 53% of the time. But if we can look at the last 2 years as well, which this data is super cool.
This is incredibly helpful, right?
Yeah,
because the reality is when you're dealing with trending markets like gold, ES, Bitcoin, whatever, you literally just need to know the direction for the day. Like it's not the same as Forex, where Forex kind of chops around. You have these ranges. Right, you just figure out what direction it's going, and this is beautiful. 72% of the time, you're going to be right if you just wait for the first hour.
I actually messed it up. The reason why I only look at regular trading hours is because we want to measure the first hour. So from 9:30 a.m. open to 10:30 a.m. So basically, in the last 2 years, yes, if that first hour from 9:30 a.m. Eastern time until 10:30 a.m. Eastern time, if it is bullish, you've got a 72% chance closing as a bullish closing day, and vice versa for the shorts.
Yeah,
68% of the time. So it's pretty
the
powerful.
reason why I had asked you about the 30-minute, right, is very specific, is because the Globex hours, there's a 8-hour and a 4-hour candle close after 30 minutes.
Yeah.
So those candle closes are so significant for determining what direction it's going to go for the day, that that first 30-minute candle is both the real-time 30-minute close, first open, the orb, and a Globex major candle close, right?
Sure. Yeah, exactly. So that's just super interesting, just to show the data there up on the screen.
That is interesting. And going back to the whole systematic versus discretionary trading topic of if you truly have like a systematic strategy, I believe that the hedge funds and every quant out there who has a PhD has taken that edge and screwed you so far.
Yeah.
And just to point out maybe one small note about this report is that it's saying it closes bullish on the day. That doesn't mean it closed bullish above that 30-minute candle print. So it's not necessarily like a 70% win rate strategy, but it does give you it gives you a huge edge to look for extension from that level.
Yeah, and I imagine you could trade this under the guise that, hey, all you have to do is maybe enter the trade, get out if it starts, if it becomes a red day, you know what I mean? Because 72% of the time, it's going to either be break even or in profit, more or less, you know what I mean? And those profitable days, like some of those days are going to rip major. So you could just let runners run if that was your strategy.
Yeah, exactly that. I think this data is powerful, but I do agree with you, Hunter, and Thomas, what you're saying about completely systematic trading is quite tough because your market conditions are always changing and so forth, and you always kind of have to stay on top of it. And I don't have I'm not a quant,
I got a question by PaliFX. How do you avoid over refining your strategy? And at what point do you is it good enough that you just stick with it forever?
Well, as someone who I was over refining it a little bit in the past few weeks. Also, just a side note, I am trading personal money. I'm not trading any props at the moment. And I feel like that really forced me to reevaluate my strategy of, am I taking the most out of every move? Because with no rules on my account, I want to push these trades. I want to push my winners. But then in refining my rules to try and push winners, I realized I lost the edge that I had. The edge that I have is taking extensions off the opening range, taking profits on, 6-minute moves in my direction, and not chasing the whole daily move that might be 30 points and being happy with the 12-point move that I got. So I don't know. I don't have a fantastic answer on how to know like when you need to stop refining too much, other than what is your bread and butter when you're having green months and periods of 2 and 3 weeks where you're green almost every day. Going back and looking at those trades and seeing exactly what are the key factors that are repeated in every single one of those, and making those things your core set of rules, and then maybe tweaking some of the smaller things that don't impact the overall trade quite as much.
Yeah. Cut things out that are not making a significant difference, right? Because then it can overcloud things, I suppose. Right?
Absolutely.
Yeah.
Also, most of the times it's actually not like this trading strategy. It's more like you're maybe over trading or poor habits that are causing you to actually lose.
A question for you: why did you switch over to futures? You said you were doing Forex before.
Yeah, so I learned trading on Forex MT5, and I just I didn't love the consolidation, choppy, trending, super wiki stop loss type movement that the Forex market provided.
Yeah.
I initially got into it. I just initially chose Forex because it was open 24/7. And that was the only reason why I chose Forex, because at the time I had a job where I needed to wake up early. My job was actually right during the market open. So I ended up choosing the Forex market because I could wake up before my job, trade, then go to work, and then come home and be done for the day. And when I looked at when I just went to the daily chart on ES and just saw that it was just a one directional move, essentially, I was like, okay, here I have a bias. I can like come in with some, or I guess really now I've learned like you shouldn't come in with a bias, but like it looked like a much easier market to trade. And that was kind of it. I just kind of made the change after not finding a ton of success in the Forex markets, and then being like, okay, I'm gonna go try something new.
I think also like I was also noting this other day, like if you're trading currencies, and this is for guys listening too, if you look at currency movements compared to Forex movements and index movements, like you sometimes get the currencies can be very choppy at times, right? Where if you see a move on a currency pair that like is like 2%, I don't think I've ever seen this. I don't know. You can tell me, but I don't think I've ever woken up to the charts. I'm like, oh my goodness, like GU's up 3% today. That doesn't happen.
Yeah, it's like 0.15.
Yeah. Whereas like Tesla and the indexes, they tend to offer bigger moves, which obviously the more volatility, the more opportunities you can be exposed to, you know.
Yeah, I mean, it really comes down to how much leverage you're able to work with. Forex market so often gives you 100, 200x sort of thing. So you're able to take advantage of it all in the same way.
But the price action can sometimes do this, bro, like the whole day. And it's like, you know, I've watched a lot of trading, you know, guys online, guys that are, you know, reputable and stuff like that. But like what you trade is as important as how you trade. You can be a fantastic trader, but if you're trading an asset that moves like choppy like this, it's going to be tough to make money. Whereas if you're trading an index or a stock that is, you know, for example, Tesla, you could have closed your eyes and bought it yesterday, even the indexes. So, you know, it offers a lot more opportunities in terms of, you want to be trading stuff that are trending, obviously, compared to in Forex that can sometimes just be choppy. I think that's why you also moved over, right, Thomas?
Absolutely. And then also just when I started getting into the space and recognizing who was it that I wanted to learn from, people like Anthony Crudelli, Pax Trader, Adam Mancini, no one was trading a Forex market.
Yeah.
They were all trading the US markets. And when you look at S&P Capital, all of these big guys, especially when I say big guys, I mean individual traders trading large amounts of money, because the big guys are also the hedge funds. But that is not relatable to me as an individual. The people who I looked up to were all trading the US markets and not the currency markets as well.
Yeah. Well, it's rather interesting. Like I'm kind of reflecting that this is very similar to Trader Nick and what he was saying. Trader Nick came in and said, hey, which guys were making the most money? Because he was trying to do the day trading Forex thing too, right? And he's like, the guys who make money for sure are the hedge funds, right? So what do hedge funds look at? They look at fundamentals. They look at, you know, inflation data. They look at unemployment rates, right? So he positions himself in a way that always follows the direction of the fundamentals, and then he just buys the pullbacks, right? Instead of day trading, it's the exact same thing that you just said, except he went down like, okay, these guys for sure make money. Like we know they're making a lot of money hand over fist, right? So just copy them.
It's that simple. No.
Now it's interesting. You know, I was just reflecting on how you were saying earlier that I think 54%, what was it? 54%
Yeah,
of
54.
the days are bullish or something, right? And I was just thinking about something that I remember looking this up is which sessions are the most bullish, right? And I was looking into that, right? And I actually found that New York session on average loses 1% per year. And more than 100% of profits on average come from the Asia and the London session.
Yeah,
because the overnight session.
Yes.
Right?
I was actually also, I looked at a statistic about this. I'll have to find the actual the link, but if you bought at the close and sold before the open, you'd be up like something ridiculous compared to if you bought at the open and sold at the close.
You're missing a problem though. Is that you're going to get hit by the fees, right?
Yeah, for sure.
because I'm pretty sure that is a strategy, but I don't think you make as much as you actually think you do, just because of
swap fees and everything like that.
Whatever the fees are, or I think you can't actually get out at the exact right moment that it spikes. I think you have to because you're not a robot that's going to close at the last millisecond, right?
Of course.
So a lot of times the spikes happen to basically arbitrage that amount of money. You know what I mean? So I know what you're referring to, right?
Wow.
But I think it's impossible to actually do properly unless you have a robot running it and doing it faster than everyone else. But yeah, so I just wanted to further your notion there that 50% of days are shorts, right? In the New York session, more than 50% are actually bearish in the New York session on average, slightly. So it's just 50-50, right? So you're totally right about not having a bias.
And it's also about knowing that I've made this up in my head. Shorts are short-lived. When you're trading the US markets, they're short-lived. So it's this isn't the type of day trade that you're going to be holding all day. As we saw today, there was fantastic short opportunities from 6,700 to 6,780. There was short from 6,715 to 6,690. But they were all short-lived. And when you look at the chart, it may have covered, a good amount of distance, but the actual time it took the actual time that trade took place was a mere matter of minutes.
Yeah. I want to bring up something as well, Hunter. I don't know what your thoughts on this, but I was reading this the other day. I follow this guy on social media. I think he's a great trader, Adam Mancini. But if you can just pull up my screen there again, please, Hunter, so I can just I can read it. I think this is good chats. But he says here, every profitable intraday trader understands this and executes according to it, whether they know it or not. Most do, though. The law is that 90% of intraday moves do not follow through to produce a smooth trend day or near trend day. I call this the golden rule. Most days price is spending the majority of the session playing in various size ranges. So basically he's saying that, and this is, I think you do it quite well, Hunters, where you take profits at levels instead of trying to just think, oh, this is just going to rip 300 points,
Yeah, if you want things to rip 300 points, if you want things to just roll, you leave it overnight, right?
Yeah, exactly. With your stop loss maybe locked in profit.
Exactly.
And so to go one step deeper on this and go back to some of these, hourly levels. So the initial balance, first hour of the day, and James, you can pull up Edgeful too while you're there. The initial balance gets broken on one side about, I think it's going to be about 93% of the time. And it gets broken on both sides about 7% of the time. Very, very minimal do we get a double break over the last 5 years.
Yeah. So this is in the last 2 years. So what
is initial balance?
The first hour's high low. First hour's high low.
Oh, I see. Okay. So they make a range. So basically what you're saying is they make a range on the first hour, and then there's a 93% chance that range will break in one direction, right?
Yeah, maybe James, can you pull up the Globex hours and let's see the percentage for the Globex hours on that one? Because I remember this was talked about pretty heavily last year, insinuating that the initial balance is not double broken very often. However, there was
yeah, but this is going to be from 6 p.m. to 5 p.m. So then the first hour will be from 6 p.m. to 7 p.m. That's the only thing.
Okay, so that's different. Okay, so let's go back to even it's just a quarter, right? So a quarter of the time we get a double break of the first hour, and 75% of the time we get a single break. Now, when I was in Tampa last year in May at a conference, one of the traders, Joey Morgan, spoke, and his strategy is solely around the initial balance. And he takes what's called a failed auction or a continuation play. So a failed auction, in essence, is you have the first hour, and then you go to the 30-minute chart, and a 30-minute candle wick closes outside and the range, and then the body closes back inside the range. So wick out, closes back in, or you're just taking a continuation of the first break. Now, if you looked at these stats, you would probably say you're going to go long 70% of the time and short in 30% of the time, meaning mean reversion for the short.
No. That's not necessarily what it's saying, though, right?
Well, if I look at this, it says we have a single break 70% of the time. So if we break out the long side, 70% of the time you would want to be long in theory. If you just looked at this. However, his strategy was opposite. He was taking the mean reversion play 70% of the time and the breakout play, 30% of the time, which just kind of touches back onto James' point about the Adam Mancini is markets trade in ranges and looking for a huge breakout just does not happen as often as the mean reversion moves.
The issue with let's say that went for the single break, right? Like it broke to the upside, right? And you decided to take a buy there because you have 70% chance that you're going to make money, right? That it's going to, or rather it's not going to break the bottom, basically.
It's not going to break the other side.
Mm-hmm. You're buying the top.
Right? Exactly.
And it's crazy because we always forget this is like we're trying to figure out the direction. No, we're trying to make money, right?
Yes.
And the very first rule that we always hear about trading is buy the lows, sell the highs, right? And it's just hilarious because everyone wants to be right. They don't want to make money, right?
Yeah.
Like 70% of the time you're going to be right, but the amount of money that you're going to make is so small.
Yeah, because you're buying the top. Yeah, it's quite tough. So ideally, you would look for a pullback and then get long on the pullback, essentially.
Potentially, yeah.
I do agree with that. We were actually speaking about it on stream today about I don't care about having these massive RR trades, and I just care about making money. Is money hitting my bank? When money hits my bank account, it doesn't say, "Oh, James, you only had a 0.7 RR on your trade."
The banks
sorry, you can only have 70% of it.
The banks rip on you. And what might actually be a decent strategy here is when you get that single break, freaking buy the bottom of the double break. You know what I mean? Because if it comes back down, maybe there's a higher chance that it does break it out, but you have maybe 50-50 that it's actually going to go in the upside direction. And now you have really great odds in how much profitability you would have.
Right? Yeah. Now it's a more range bound day. So you're playing level to level at that point. And so I met Tom Hugard a month and a half ago. He spoke at a conference I went to, got to chat with him for a little bit. And one of the things that he said that really stood out to me was buy low, sell high has cost traders more money than all the world wars combined. And his spin on it is buy high, sell higher, and sell lower, sell lower.
That's the Bitcoin strategy.
Mm-hmm.
Yeah. Buy high, sell higher. Yeah, I've heard this before. Or the opposite one is when we're in a bear market, buy low and then sell even lower. for a loss.
Yeah. Yeah, and that's the whole thing with day trading, you know. If it's going higher and you want to make money, in my opinion, you should buy it. You shouldn't try and sell it.
Yeah, well, yeah, the idea is what we're trying to do is determine, okay, are these trends real? Right. And I think that's the major question is if we know for sure that it's going to be going up, then it doesn't matter. You can just buy it at any time. But your downside risk is so much more if you're buying the top, right? And that's where a lot of traders get stuck is, hey, you might be right 70% of the time, but 30% of the time you lose 5 times as much as what you would have won, right?
Mm-hmm. Yeah.
Well, I got a kind of a last question here. Maybe we can wrap it up too. Is by Omkar. If you had to start from zero, how would you act differently?
No, that's a good question. I think when I reflect on my progress as a trader, the first year and a half was super. You just got to grind. You just got to get as much screen time in as you can. But what I would do differently is being kinder to myself in the sense of I'm not going to feel defeated just because I lost money. And I think it's really important the energy that you bring to your trading session. And if you are only feeling negativity from the losses, because that's bound to happen, the losses are just you're just going to take losses for at least 2 years probably, unless if you get lucky or you're a little abnormal. I think most of the time you're going to take losses for a year or two, and if you let those losses get to you personally and you start to work less hard and you start to focus less and you start to think more about the money, I think you just overall hinder your capability and your growth potential. And I definitely noticed that within myself for a portion of this year. And so if I had to go back, I would try and do that aspect of my trading differently and focus on just the positivity through the losses.
Yeah, fair play. Awesome. James, do you have any more questions to kind of wrap this up or?
Maybe Thomas, if you can give, I know you've just kind of done it now, but if you can give maybe what's the base piece of advice that you've received in your trading?
The best piece of advice. Man, I have, okay. The best, it's not, I don't even know if it's a piece of advice. I met this guy, David Capablanca. He's a short only penny stock trader. I met him maybe 2 years ago, a year and a half ago, and we spent a lot of time together. And at the end, he just, with this big smile on his face, said, "Trading is awesome. Never give up." And I could just tell how genuine he really meant that. And coming from a mentor of mine, that was the best piece of trading advice I think I've ever gotten, because it's really kept me pushing and motivated to see my career through here. Yeah.
Awesome. Good stuff, Thomas. Thank you so much for joining us, man. Where can I guests find you?
YouTube, Thomas Kello, same name is right there. Kello, like hello.
Awesome. You're teaching people how to trade on there or what?
So yeah, or actually go to my podcast. I have a podcast. It's called Behind the Charts. It's me and two friends. We just share our learning curve, to be honest. We just have very authentic conversations. We get on lots of great guests. James has been on there, and we just do once a week, an hour long. And that's where I'm most active right now, because I'm not really on social media.
Behind the Charts. There's a Behind the Charts by Larry McMillan.
Yeah, not that guy.
You got Behind the Charts podcast. I think I see it here. Okay, I'm gonna put a link of that in the Discord. We're also gonna announce the winner of the 50K challenge on the Discord. Thanks so much, Thomas, for joining us, and good luck with your trading. Okay.
Yeah, nice chatting, everybody.
Ciao.
See ya.
Cheers, guys.